Okay, what's going on, guys? Welcome to Stock Talk with Nico Criticos. Today, we're going to be doing some stock analysis for Adobe stock. I've been buying this stock for a long time now. This is one of my few losers of 2025, and I've gotten my cost basis down to 414, so I'm still down 20%, but I'm not completely bearish on this stock yet. I still think that this stock is going to turn around. There's lots of companies like that go through periods like this where there's threats or there's competition, and then at some point it turns around. I mean, if you look at Meta a couple of years ago, there was lots of there was TikTok competition, there was metaverse worries, there was spending worries, and then Meta turned around and the stock, you made a fortune if you bought that stock when it was around $100 and it went up to the 700s. You made a fortune on that stock. So I think something like that is possible with Adobe as well. Adobe has it's not like the numbers are bad. If the numbers were downtrending, I would say, okay, there's a reason that the multiple is going down and the stock is going down. But that's not the case here. So we look at Adobe has, a couple of years ago the stock was $630. Okay, it actually hit it twice, 2024 and 2021. Um and the market cap's only 138 billion now, okay? But let's look at these numbers. It's at a forward PE of 14, okay? Their revenue has absolutely no problem whatsoever. Look at this graph here. We could narrow it down to the last 10 years. Look at the graph is still as perfect as ever. Okay. 22 billion, $23 billion of sales the past year. There's nothing wrong with this. They're growing 10% a year. Okay. They're growing 10% a year. That does not sound like of course there's AI worries, but again, it's not like ChatGPT just came out a couple months ago or something. Like it's been around for a couple of years now. So although it's still growing, it's still getting better. There's still a chance for it to be more disruptive in a couple of years. That's not it hasn't shown that yet. And plus, Adobe also is integrating AI. So you have to keep that in mind too. Um, then we look at performance obligation is the amount of money that's obligated for them to make pretty much, and those numbers look good. EBITDA net income is obviously my favorite, and net income is growing 16% a year, right? They just did a record quarter, $7 billion of the trailing 12 months. $7 billion and the company's only 138 billion. That's a really good deal. Look at just a couple of years ago, they were only doing, I mean, before ChatGPT, they were stuck at this 4.8 billion mark. And then since then, look at the numbers have the past over for a year now, these numbers are significantly better. So it's weird. I mean, typically when a stock keeps performing better and better, or when a company keeps performing better and better, the stock reflects that at some point. Things always diverge for a short period of time. In this, I guess it can, for a short period of time, things can diverge and the stock will not represent the actual earnings or the success of the company. But sooner or later, the stock starts to reflect the reality. Free cash flow, beautiful, over $9 billion. Okay. EPS, that's the other thing. They're buying back shares really nicely. So, how does EPS growth compare with net income, just for comparison? So, we're looking at 20 and 35%. Those numbers are incredible because net income is only 16 and 30%. The reason it's 20 and 35 is because they're buying back a lot of shares, which we're going to get into. Cash to debt, not great. Not great, but it's nothing insanely bad. Return of capital, I like to look at that on an annual basis. You can just see here. So they don't pay a dividend, but common stock repurchase $9.5 billion. That's insane. Let's go back to trailing 12 months here. Yeah, this next chart. This is phenomenal. Look at this. They're buying back the past year they bought back 4% of shares. 4% is a lot. That's a ton of shares. They're buying back billions of dollars worth of stock. That's crazy. Ratio for let's go to annual for that. That's right. You can't look at the ratio for annual. Let's go back here. Profit margin 29%. Incredible. Let's go to Yahoo Finance. So here's their expected earnings, right? I mean, look at this. They did 18 last year, 20 this year, and then 23. This is a growing company, 10% revenue growth. Like this stock could easily should be trading at 25 times earnings. So next year, I think the stock should be close to $600. If we want to talk like where the stock should be trading, and of course, investors can push it down or they could be scared, but this is where the stock should be. I mean, look, the stock used to trade in the 40s and 50s. So this stock is just a buy for me. Like I almost want to buy more. Um, what else do we need to look at here? Let's go to these numbers are. I mean, the last 4 quarters they beat on EPS. The numbers are just solid here. I mean, this stock should not be trading in the 300s. That's really all it comes down to. Should not be trading in the 300s. Here's a P ratio the last couple of years. In 2023, I thought this stock was undervalued at 32 times earnings. Now we're down to 20 times earnings. This stock is being valued as if it's about to go, out of business or something. So this stock is a buy. I do want to buy more. As you can see, I already have I have a little bit over. I have what? Yeah, a little bit over $3,000 in here. So I don't know. It would be nice to lower my cost basis. I don't know. I mean, in 2022, you look at the stock went down to 275. So it's possible this thing goes down to 300 or something. And that's one of my concerns. If that were to happen, maybe then I would buy another share. But this stock just looks like a buy. The other thing I like to look at is what are hedge funds and insiders doing. See, so there's nothing super bullish for this. If you go down here, you can see. Yeah, see, there's nothing super bullish going on with that activity, but the stock just looks like a buy. That's all it comes down to. The other thing I want to point out too, I thought was a good point, is the fact that okay, so I mean I use Canva and certain other platforms to edit and stuff. I'm not a huge editor or marketing person really, but pretty much if you're using ChatGPT or certain AI programs for video or image generation and editing, especially editing for videos and images. Um, it's not easy to if you're going to use ChatGPT or something, you have to regenerate the picture, right? To make an edit, you have to tell it what you want it to change. Wait a minute or two, and then it'll remake the whole picture, and it's not consistent. It's not consistent, and so that's just something to keep in mind. Adobe has, the name brand, they have a great reputation, they have a strong, loyal customer base. They're still growing. So to me, that's why it's a buy. But let me know what you guys think, and I will see you in the next video.